guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh and the market has taken a turn for the worse. We're pretty much at the low point of the day right now. So the Nifty is currently 130 points in the red, and like you can see on your screen, there's been a sharp knock which has come through in the past couple of minutes, with the index now down 0.7%. Take a look at what's going on with the banks, because even over there you've seen quite a knock come through, and that index, which was managing to trade slightly better, is now down at the low point of the day again, over 200 points in the red. But the mid caps clearly looking the worst today. It's a near 1% cut that we are seeing on the mid cap index. We'll talk more about the market action, but first up, let me invite our guests on the show today. We have Vijay Chopra from EnochVentures.com as well as Ruchit Jain from 5paisa.com to answer all of your stock related queries. Ruchit as well as Vijay, thanks a lot for joining us today and taking out the time for all of our queries. We have lots of them lined up, so let's start with the first one. This comes in from Tanveer, who writes to us from Pune. He says he holds 50 shares of Tata Motors, bought at rupees 395. He's a medium-term investor and he wants to know whether he should hold the stock or he should sell. Vijay, I'm going to come to you first on Tata Motors. He bought it at a good price, but you know, the bad news doesn't seem to be ending for Tata Motors. Even yesterday, there was news of the CEO resigning. How do you look at this stock?
Well, I think that Tata Motors is one of the companies which I have huge respect for. If you look at the trajectory, in the last 2 years, it has revamped itself to be one of the best and one of the biggest EV players in the country. The market share presently is close to 60%. And the new models which Tatas are coming up with, people are liking it. We are seeing more of Tata Safaris and more of Harriers on the road, and a lot of Altroz models are now visible on the road. Earlier, you know, they didn't have the reputation of designing, so they have actually worked on the product. Number two, JLR. I think that, you know, JLR is the main reason why Tata Motors is not performing as of now. But I think that as things improve in China, in Europe, you know, JLR numbers would surely improve. And once that starts happening, I see Tata Motors, you know, going to maybe 700 or even 900. So it's a long haul, you know, stock. If somebody is there for the short term, I don't think that, you know, you can get excited about it. But yes, the management is also giving a great guidance that the company is going to be debt free. They've been regularly reducing the debt to a great extent, and maybe by next year, 23, 24, the company is going to be debt free. So a lot of overhang is due to the debt on the books. So I think that Tata Motors is a good stock to have in a portfolio. But again, for the long haul, it might disappoint in the shorter term. But yes, in the longer term, I see levels of 700 and even 900.
All right, so perhaps this would be a good play for the long term. But, you know, even now, while the company has been talking about being debt-free, even in this quarter's numbers, they have seen only debt only go up. So that is what has the street really worried. But perhaps from a longer-term perspective, this would be a good stock to hold. Ruchit, coming to you on this, he has said that he's a medium-term investor. So I want you to take us through what we should do for, you know, in the past year alone, the stock is down around 16, 17%. You think in the medium term, there's scope for an up move?
Yeah, very good afternoon, Pravita. Well, I think in the medium term, the stock would continue to consolidate within a range. We have seen that the prices had started its corrective phase in November 2021, almost a year back. And after that price-wise correction, initially from 540 to 370, 380. The stock has been consolidating since last few months. And the good thing is that on the weekly charts, the weekly 200 EMA is placed around at 370, 380 mark. So I think 380 to 450 would be the range where the stock would continue its consolidation over next few months. So I'm not expecting any significant directional move on either side in Tata Motors. From a very short-term perspective, 400 should be the 400 is a good support for the stock. So if it's looking for only for short-term, then he should place a stop loss below 400. And over medium-term, I think it would continue to trade within this broad range.
All right, so that is the view on Tata Motors. The good news is that he got it at quite a decent price. The average price is around 395. So that is the view on Tata Motors. The next query comes in from Mohan Manjare. He calls us from Thane and he has investments in GOCL. In fact, he's on the line with us now. So Mohan, if you can hear me, please go ahead, ask us your query, and then I'm going to pose this to our guests as well. Mohan, can you hear me?
Yes, I can hear you.
Yeah, please go ahead.
My query is, I am holding 1,000 shares of GOCL
Okay.
at the rate of 295 and 1,000 shares of Wabag at the rate of 244.
Okay.
I can hold it for a long time. So what is the future of these two shares?
Okay, you can hold it for a long time. That is good.
At least 2-3 years, no problem.
Okay, 2-3 years. Vijay, coming to you on this, what do you think of GOCL as well as Wabag?
Well, I think that GOCL has shown a fantastic run-up in the last few days only. So I think that, booking profits won't be a bad idea.
Okay.
So GOCL is definitely a book, although it's a great stock. If it comes back again around 280, 290, you can, grab it again. But as of now, I think that, he should exit and book profit. As far as Wabag is concerned, I think that this is the long-term story again. We are going to have a major water crisis in the future. This company is into water conservation and does a lot of work. So I think that Wabag is one company you can hold on in your portfolios for a longer term. This might be a multi-bagger. Today it's at around 300. You might see at 1,000 or maybe at 2,000 maybe a few years down the line. Because the kind of water issues we face every summer across the country. I think cities like Bangalore, Chennai, even Delhi, they are parched. There's hardly any water. So there has to be some solution. And Wabag is one major company which is into water treatment and gives a lot of solutions around water treatment, around water. So Wabag is definitely a long-term hold, but GOCL, since it has run up quite a bit and quite sharply, so it should exit.
All right, got that on both of the stocks. Ruchit, coming to you on this, I was just looking at the chart of GOCL. In 5 days, it's up 30%. What do you think? You should book some of your profits here?
Well, I would recommend to hold as of now because if I look at the charts, then certainly last few trading sessions have been very interesting. And even if you look at today's trading session, the stock is up by 11%, and this up move has been supported by very good volumes. And usually when we see a price up move supported by good volumes, those stocks tend to show relative outperformance in the short term. So next hurdle for the stock should come around at 380 or 400 mark. I think that could be ideally a good range where some partial profit bookings could be done. But for now, I think the support base for the stock has shifted now higher to 330. So keep a stop loss below 330, which would be much in the money of from his buy price and can continue to ride this trend.
All right. And what about VA Tech? How are you looking at that one?
So even VA Tech can be held on, but should have some medium-term perspective over the stock. We have seen an inverted head and shoulders breakout, which is a bullish pattern technically, and the target projections are coming around the previous swing highs, which were 375, 380. So quite a good up move from current levels could be seen in next maybe 6 to 8 months. So around for targets of 370, 380, should continue to hold on VA Tech, Wabag as well.
All right, got that. Mr. Mohan, I hope that helps you, and the advice that our guests have given will help you make a decision on that front. But with that, our next query is also here. We have Praveen Kumar Gandhi, who writes to us from Bangalore, and he says he holds 3,700 shares of IDFC First Bank. He bought this at 45 rupees, and he also has 50 shares of Berger Paints, which he bought at 587. Now, he's saying that he's a medium-term investor, and he wants to know what he should do with both of these on IDFC First and on Berger. Ruchit, let me come to you on this. Berger Paints has definitely, been weak this year. It's down over 20%. But IDFC First, on the other hand, is looked quite good.
I think yes, overall we have seen that in this up move of last 3 or 4 months, the banking space has done quite well, and within the banking names, IDFC First has been a relative outperformer. Yeah. So usually what happens that when the stocks show some outperformance within the sector, I think whenever the sector moves up, these stocks tend to continue its up move. So even on the charts, it's looking positive. We might see some consolidation or correction in the short term. That's because of the overbought momentum setups. But over medium term, he can expect levels around 65 to 70, around 68 to 70 levels in IDFC First Bank. So I would recommend to continue to hold on IDFC First Bank. And within the paint sector, I think the paint sector, it's not only the Berger Paint, but even if you see other stocks such as Asian Paints and other names, they have not been doing well in the short term. So I'm not expecting any significant move in the short term. Primarily a consolidation in the range of 660 to 580 could be there. So hold on for a pullback move towards that 650, 660 mark. Around that, those levels, I think ideally it would be a good time to take a review again.
All right, that is on Berger and IDFC first. Vijay, coming to you on this, take us through, what do you think of IDFC first? And also, do you think that this is a good pick within the banking space? And Berger, how do you think it looks now? Because crude prices are cooling off significantly. So how would you look at it in that setup?
So first, coming to IDFC Bank, I think that this stock has shown a lot of resilience, not some, but almost from 30 levels, it has gone up to 60, doubled up. Within a couple of months. But still, I think that there is steam left. Markets are a bit jittery. They are near the all-time high. That's why, we see some kind of a profit moving there. But IDFC has the potential of going up to 65. So keep a stop loss, strict stop loss of 52 and keep on holding the position. I think that IDFC can surely come up. As far as Berger is concerned, you have rightly pointed out, hit the nail on the head. That 40% of the cost any paint company carries is the primarily raw material cost, and crude is the major raw material product where they get their raw material from. And we have seen some cooling off for sure. So this would help. So keep a stop loss of 580. Stay in the position. I think that once it starts moving up, we can see 720, 750 levels coming on Berger. So stay invested with the stop loss.
All right, stay invested with a stop loss. By the way, as we speak, crude is now down below $90 a barrel. It's around $89 a barrel. So we've seen quite a slip come through in the crude oil prices this week. The next query coming in is from Kamal Kapoor, who writes to us from Patna. He holds 30 shares of Marico, bought at 400. He's a medium-term investor and wants to know whether he should hold this investment or get out of it. Vijay, what do you think of Marico? We have been talking about these consumption stocks and how they've not really done so well, but your thoughts on Marico alone?
Well, the major reasons why FMCG has not worked that well is the inflation. The input cost has gone up considerably. So that is the reason why we are not seeing any great performance. Otherwise, these are great companies like Dabur, Marico, Hindustan Lever, ITC. These are fantastic companies. And I think that, they are into a decent consolidation mode. If I look at the Marico chart, it's been over a year. It has been consolidating around these levels. But still, I think that, if somebody is a long-term investor, keep a stop loss of 470, stay invested. These are great companies. And there are downturns, but I think that inflation is either topping out or has topped out already. We are going to see inflation numbers, softening over a period of time from here on. And if at all we see the stoppage of increase of interest rates, that would be icing over the cake. So I think that some of these stocks, some of the great companies are just waiting for inflation to cool down, and once that happens, they are going to shoot back again. So once it starts shooting back again, it would again reach 550, 560 levels. So keep on holding with a stop loss of 470.
All right, hold with a stop loss of 470. And, he did get into this one at around 400. So he's definitely still making good money on it. So perhaps he could hold on for a little bit longer. Ruchit, coming to you on Marico, how do you think the charts look on this one? Welcome back. You're still tuned into Your Stocks on CNBC-TV18, and we still have Vijay Chopra and Ruchit Jain with us to take you through all of the stock-related queries that you have sent us. So let's get back to those. Sridhar J. Rao writes to us from Bengaluru. He holds 60 shares of Jubilant Foodworks. He has them at 754 and 84 shares of Aurobindo Pharma bought at 718. He's saying that he's a long-term investor, so he's comfortable holding on for several years now, but he wants to know what he should do on both of these, on Jubilant Foodworks as well as Aurobindo Pharma. Vijay, let me come to you on this first. I want to ask you about Aurobindo Pharma. Of course, the stock has seen a sharp correction from the levels he bought it at. The company's earnings also are really not that great. How do you look at this from a longer term perspective?
Well, I think that, you should keep a stop loss of 450 and exit if at all it hits. Otherwise, I think that, it is going to take a long time. I'm watching several companies in the pharma space. I think that Zydus Cadila looks good, Dr. Reddy's looks good. But Auro Pharma, so to say, since last almost 2 years, it hasn't done much. And we've seen it declining. So I think that, if at all the stop loss is hit, you should get into some other fundamentally strong story. I think Cipla, Sun Pharma, Zydus Cadila are better bets. Dr. Reddy's are better bets than Auro Pharma. So I won't recommend to to be in this stock for a long time, and if at all the stop loss hits.
All right, got it. And there are, according to you, a lot of better picks within the pharma space. Vijay, also on Jubilant Foodwork, this stock has also corrected significantly. It's down around 30% in 1 year alone. Do you think in the next couple of years you could see good news as far as the stock move is concerned on this one?
Well, I think that it is a great food and a logistics company, and over the years it has made its mark. But yes, input costs have driven balance sheets like crazy, and the profits are not there on the books. The stock doesn't react to that level. Yeah. But again, I would say that stay invested. Stop loss of 520. I'm recommending a stop loss because in such times, there's a war going on, there might be some bad news flow anytime. So be prepared. Keep a stop loss. Don't hang around and don't fight with the market. I would recommend that. There's no point of fighting with the market. There would be plenty of opportunities elsewhere. So keep a stop loss of 520. Stay invested. I think that if at all the market turns back, the war stops, or there's some positive news flow, the interest rates, the rise in the interest rates are arrested to some extent. I think that most of the companies would come back because high interest rates and high commodity prices and high input costs are keeping balance sheets, they're keeping it a tizzy. And profitability, as expected, is not coming. So although the sales numbers, the top line grows, the bottom line doesn't. And stocks generally, they respond to better bottom lines. So I think that keep a stop loss, stay invested.
All right, keep a stop loss, but you can stay invested for now. That is on Jubilant Food. By the way, after the Q2 earnings, there was a note by Jefferies. They have trimmed their FY24 to 25 EPS by 3 to 4%, but they do still have a hold rating on this stock. I'm going to ask Ruchit as well about both of these. Ruchit, your call on Aurobindo, Jubilant Food, they both corrected sharply like we were just talking about. So take us through what you think of these, and also if there's anything else within the similar space that you prefer.
Well, the mid to long-term charts are not positive for both the stocks. Aurobindo Pharma has already been an underperformer within the pharmaceutical space. So I think better to exit from this stock and rather look for some other name which have shown a good outperformance in the recent run-up or the recent pullback mainly. I think Sun Pharma would be a better pick compared to Aurobindo Pharma, because even if you look at the pharmaceutical index which rallied recently, majority of the rally came from because of Sun Pharma, where the price up moves have been supported by good volumes. So I think Sun Pharma should be a better pick for mid to long term as well compared to Aurobindo Pharma. Jubilant Food, although we have seen good returns over last few years, but the short to medium term charts have turned negative now. Recently, after that post that quarterly results, we witnessed that the stock has broken its important supports, and that too with very high volumes. And such selling with high volumes generally leads to an underperformance. So I believe that the stock could correct towards 480, 460 mark. I think so. It's better to take an exit even at current levels. And maybe if it comes down towards those levels, then those ideally should be a good levels to if he wants to re-enter.
All right, got it. That is the view coming in on Jubilant Food as well as on Aurobindo Pharma. We have one more query. This comes in from Kuldeep Sood. He writes to us from Palampur. He says he holds 1,000 shares of TVS Motors bought at 25. He's a long-term investor and wants to know whether he should hold or whether he should switch from TVS to M&M, and would that be a good idea? The TVS stock is current. I don't know when he would have got in to get it at that price, but just this year alone, the stock has done phenomenally well. It's up around 70% in this year alone. Vijay, your thoughts on TVS Motors, and also how do you look at it versus, say, an M&M, like he's asking?
TVS is a great group, no doubt about that. And the stock has literally, doubled this year. And again, as I said earlier, keep a stop loss in all your trades. So a stop loss of 1,050 is recommended, and keep on holding. If at all it hits, you should get out. And of course, M&M and Hero MotoCorp, I think, are better options. M&M, you get a greater range, but we have seen a decent rally in most of the auto companies. So chances are that we might see some corrections and we might see some cooling off in the auto space. I would recommend that he can probably switch to metals and look at companies like Vedanta, companies like Hindustan Copper or Tata Steel. So these companies would give you a better return over a period of time because they have not run up, and they've seen a decent correction already. So M&M also seemingly looks that it might correct. I think getting into metals would be a better idea than being in the auto space.
All right, maybe most of the up move that we were supposed to get in the auto space is already in. That is on TVS. Ruchit, your thoughts on this one? Of course, this has been an excellent performer in trade, but do you think most of it is already in?
See, I think yes, we have seen a good rally. There may be some short-term corrections, but no, those corrections are likely to be seen as just corrective phases within an uptrend. Because if I look at the monthly charts, then the monthly run-up still doesn't have to seem to have completed. Where on a Elliott wave structure, just third wave have completed, and the stock has now entered into some consolidation of fourth wave. So that should be followed by another round of up move, over medium term. So even if you look at in the two-wheeler space also, if I compare the TVS Motor moves with other stocks such as Hero MotoCorp or Bajaj Auto over last few months, then this has been a good relative outperformer. So I think over mid to long term, the stock is likely to continue its outperformance. So I would recommend to continue to hold this stock.
All right, got it. That is the view coming in on TVS Motors. But with that, Ruchit, Vijay, we're going to leave it on that note. Thank you very much for joining us and taking our viewers through all of their individual stock-related queries. We're going to wind down on that note with the news that the market is just slightly off the day's low. But ever since 1:30 p.m., that's when we saw that big down move come through. And we are pretty much still around the day's low right now with a cut of around 0.6%. So thank you for tuning in. And remember, you can always email us your queries. We will keep taking them up with our experts. Stay tuned. Closing bell comes up for what seems like is going to be a very exciting last hour of trade.